Ladies and gentlemen, we are here on June 9th and we are talking about the real estate market. And although I am in Toronto, this shakeup is happening across Canada, across the United States. As you guys know, I am a real estate broker here in Toronto, but more importantly, I'm an investor in North America in real estate and all the things that can make you money. So, although I'm going to give a couple references to Toronto today, this is generally about the entire market in North America and how I can give you tips on how not to lose as much money and potentially even make a lot more money with your investments. All right, so let's jump into some of the stories of today. We want to make sure that you guys are going to be following all of this stuff because my goodness, is this ever important. All right, so let's first of all take a look at how the market is behaving right now where I am. Now, this is going to be a proxy for any city over 1 million people anywhere in North America. So in Toronto, in a city over 1 million people, like 5 million people, we can see that in the beginning of the year, it was taking on average 30 days to sell a property. Now it is only taking 15 days. Absolutely amazing how fast things are moving. That's quite incredible. All right, so let's take a look at the prices. In the past 12 months, prices have gone from 1.1 million and they have soared to 1.12 million. They have recovered all of their losses that they lost just in the past 12 months. But to put that in perspective, if we go back 2 years and try to take a look at where we were sitting then, it's going to be a slightly different story. It peaked out at almost 1.3 and is now at 1.1. So we're still down around 20% on homes overall from peak to trough. It was a lot worse in the spring, right? But now we're a lot better off. Now, sales to asking ratio, the same games is happening all over again, where people are paying on average 105% of an asking price. That means if you're asking for $1 million, you're advertising your home for $1 million on the market, you can generally get about $1,050,000 for that same property. So this is a big, big deal. And this is happening. It doesn't really matter where we're talking, to be honest. This is the exact same if you guys are talking about Vancouver in Canada, if you're talking about Montreal, Calgary, if we're talking about all over the States, it's exactly the same. All right, so let's go into a couple more details that I want to show you guys. So the big news in Canada for you is that the FCAC is coming out with new legislation to try to help people who have no means of paying for their mortgages. So this is where it gets a little bit dodgy, to be honest with you, and this is where it gets into a lot of the politics. So let me just break down for you simply what the differences are. So let's just pull up my screen then, and I'm going to share this. These are the changes that they intend to bring on for everybody. So for mortgage relief for people, they want to make sure, number one, that you are going to be getting mortgage relief. And so the government now wants to only give it to people who have residential mortgages, only residential mortgages, nobody else. That you're going to waive any penalties to break your mortgage early. You're going to waive all mortgage breakage fees or any other penalties whatsoever. They don't want any internal fees if you're going to break your mortgage or if you cannot pay for your whole mortgage. They do not want you to get a higher rate, not now or not later if you do so either. And they want it not to show up on your credit. So you have to ask yourselves, who is going to do well here? So number one, home prices have got to reflect and got to get pushed down. And remember, this is only people with residential mortgages that get these new rules, okay? So anybody that is a homeowner with no mortgage, they are going to lose because their home prices are going to be going down. But if you are a homeowner with a mortgage and you hit the criteria that you could get all this mortgage relief, then you are going to be able to get that. Also, if you're a home buyer, there's not going to be as many loans available to you. This is the main key that I wanted to show you guys, is that remember, there are 3 competing interests in any country. This is Canada, United States. It doesn't matter where. So one different in Canada, it's OSFI, but in other countries, there's always one that sets up banking regulations, banking rules. There's going to be one institution that sets interest rates, which is generally the central bank, in our case, Bank of Canada. And there's one different organization that handles consumer rights, and that in Canada is FCAC. That's who we're talking about today. So what happened this week is the consumer rights decided that Canadians need more rights. And so now the banking regulator has to come out with a bunch of rules. And that's going to come out with probably in the next couple of weeks. We're going to find out who is going to be doing that for us. Now, if you want any trick, this is what I would always tell you to look at is the secret. The big secret is if you want to know what is going to happen in the market, pay attention to these two things. The economy only equals oil and by extension energy, but oil and liquidity specifically meaning loans, not cash, loans. Those two things are the two biggest drivers of any economy. Almost every product that you have has some kind of oil in it, was transported by oil, and every company is running on loans, and every person is running on loans. And so right now, in an environment where both of them are declining, we could be in a lot of trouble. All right, so let me branch out. We're going to show you a couple more articles then. So this is going to be coming more and more and more. This isn't just going to be temporary or just Canada. We're going to see all the countries in Europe start to do this as well because they can't risk their economy imploding. So what are they going to do? People that are on variable rate mortgages where they have fluctuating interest rates. You guys know that I talk all the time about negative amortization where every single month your mortgage is getting bigger, not less. And so what do they want to do? They want to waive all the penalties, like we said before, let you make a lump sum payment with no cost, waiving internal fees, and they want you to not have any interest on interest, which is insanity. Absolutely crazy that they're even thinking of that. I can't even believe it. So if we head on, then this is going to be everybody. Toronto Dominion, Bank of Montreal, Canadian Imperial Bank, Royal Bank, all of them. And this is going to be trickling down to other places in the States as more and more people are getting into trouble. So in Canada, why we're in trouble is because we're having these 70, 90-year, 100-year mortgages. So all of your mortgages actually come by and is tied to your fixed rate mortgages to the government bonds. But let's zoom in. This is 1 year. Let's zoom in on this then just to the past 3 months. It just takes off like a rocket sitting down in the twos, now all the way to 4%. So that is going to massively increase the amount of your mortgage that you're going to have to pay. And so do we think, the question is, do we think that the mortgages are going to go higher or lower? Well, then the answer is right in front of us. Let's take a look at the guide. So the bank has to make less money by not charging you a lump sum. They got to make that money somewhere. They also are not going to be able to pay a price if you break your mortgage. They also have to waive internal fees. They don't make that money. They don't make that money. Also, you're not allowed to charge interest on interest. Well, who's going to pay for it then? How is the bank going to make money then? This is what I need you guys to actually think about, because if we go and take a look at this in the big picture, if they don't make that money, then the bank stocks will crash because they're going to not make billions of dollars. But who owns the bank stocks? You, me, the pension funds? All of them own those stocks. So if those crash, then what? So what banks will do is they're now going to charge other people other fees and make it even harder to get loans. So this we've seen play out time and time again. So if this is all going to happen and all of these relief measures are coming for people with mortgages, but remember, only residential mortgages on your own private home. No one who is an investor is going to get any help here. And we're seeing interest rates go up. That already squeezes how much money. And in Canada, we're only sitting at 4.75, embarrassingly below where the United States are at 5.25. And so do we think that the rates are going to be going up? Well, hell yeah, they're going up, and they're going to be going up at quite a pace. So let's take a look at the jobs report, a couple of the jobs reports, and try and pull it up. In the United States, they just came out with their jobs report. 209,000. 209. The economy is on fire, you guys. Unbelievable. 209,000. That is double what they were expecting. Oh my goodness, that's a big clue. If we look at Canada, Canada added 60,000 jobs. 60,000. United States is 10 times our size, and they added 10,000. Unbelievable. So if we got triple, we were expecting 20,000. Don't you think they're going to raise the rates? Of course they're going to raise the rates. So the question is how much higher? It's currently sitting at 4.75 in Canada. To me, they would have to hit with at least a 0.5, and I don't know if they will. They haven't done a 0.5 since December. And so you could see a smooth arc always to both governments, a quarter point raise, half, one, and then start slowing it down 7.5, 0.5, 0.5, 0.2, and then they skipped a couple of 0.2. So they're probably only going to do a 0.2, but they should be probably doing a 0.5. United States is almost definitely going to be raising it. It's now a 90% chance that they will be raising it up again in a couple weeks. So this is going to continue, you guys. Be prepared for this. The interest rates between fixed and variable are closing the gap. It was at least 1% just a couple months ago, difference between a fixed and variable. Now they're getting really, really close again. So Canada has a love affair with variable rate mortgages, which leaves a lot of people very, very susceptible to those pricing, the prices. But now a good thing for lenders. So if I'm going to be saving money, if we just want to take a look at where the bond rate is sitting right now at 3.982, that's 4%. If we go look at what the government yields are, look at how much they're paying right now. Huge. All right, let's go down. Take a look. 1 year to 3 year, 4.5, 4.6, 4.7. This is what you can get if you loan your money to the government, a guaranteed 5% return with zero risk. So why on earth would banks be willing to lend you money on a mortgage for 2% when they could actually go and get 4.75? And this is why reverse repo is so full at the governments. So when we're trying to look at all of this and we're trying to be able to piece together what are the prices in Toronto, we see a massive increase in prices that has happened since February, shot right up. This should be manna from heaven from anybody who is even close to considering themselves to be selling your home. You should be loving this. This is a gift for you to have that. If we go back just to 1 year, it actually has recovered all the losses that it has incurred in the past year. Unbelievable. Against all odds, the people are fighting the Federal Reserve. They're fighting their central banks. Unbelievable. This is like fireworks in my field. Unbelievable. So if we take a look at where we have gone just in the past, let's say 1 year, we can see what had happened after Silicon Valley Bank collapsed right here in March. When that collapsed, it dropped those rates really, really low in March. And then this massive section of low time between March and May, everybody was jumping in going, wow, the rates fell so much, it's all over. And so this is what happens when you have this massive price increase. And remember, this is a looking back. It's a looking in the rear view mirror, guys. Now that you see this and you see interest rates peaking all the way up to record paces in the past 2 years, they have not hit that. In fact, if we go back, it hasn't hit this for like 20 years. But anyway, this rate is now so high. This is going to take these prices that are here in Toronto and squeeze them down. When I say Toronto, I also mean Montreal, Vancouver. It doesn't matter if you're in the United States and you want to look at prices in the United States, in the big cities, New York, Seattle, Miami, San Francisco, they're all going to get squashed as these interest rates go up. The number one ticking time bomb that's going to happen is commercial real estate, and residential real estate will have to follow after that. The number one thing that I got to tell you that is the most dangerous comment that I ever hear is, nope, there's a lot of demand out there. There's a lot of people coming, so everyone's going to have to buy. And that is a load of garbage, and do not believe that. Because if you go to India, there's a huge demand for homes there because there's so many homeless people. There's a lot of demand in China. There's a lot of demand in Africa. There's demand everywhere. So what does that mean? It only works if you can have a job, income, and be able to make the payments. So we have a client who has a couple $1 million home, many millions sitting in the bank. They don't have a job. Why would they? They have a lot of money, and the bank won't lend them a penny, zero, squat, no mortgages unless you have an income. So what are you supposed to do in that case, right? So you can have money and still not be able to have a mortgage. And so the liquidity, remember what I said, those two things is oil prices and liquidity. And we know that to get a loan now is almost impossible. So let me try to pull up for you. We're going to do this live, okay? Let's try to pull up oil price right now. Would we like to look up? I guess we could look up WTI or Brent. What would you like to look up? Maybe we'll pull up WTI crude price today. In the past year, you guys, prices have almost dropped in half. Don't you think that we should know about this? Prices were at $120 at what time, and then they hit all the way as low as in the 60s. So today it's at 73. But have you seen that at the pumps? You haven't seen that. The price of oil is dropping like a stone, even though the governments are cutting. Iran, Saudi Arabia, Russia are all cutting oil production, and prices still falling. Don't you think that the economy is slowing down and you're not seeing that? That's real time. This isn't looking like at the numbers that happened in the last quarter. So when oil goes down and mortgages go down, we're in a lot of trouble. So where I'm seeing in liquidity, because there is no chart that talks about liquidity. And by liquidity, I mean, are you available to get a loan? So let me share my screen with you and you can let me know what you think, because this is what I'm seeing. I want to know what you guys are seeing. What we are seeing is last year in 2022, if you had an advertised rate of 2%, there was some 1%, then I would get 1%. That's what I would get. I would get the advertised price. But in 2023, the advertised price right now is sitting at like 6%. But at 6%, do I get 6%? They go, nope. You now have to pay 8%. And I'm like, why? Why do you have to pay a 2% premium? And you know what the banks are saying? Risk. Risk. You may lose your job. You may lose something. So you don't get the advertised rate. I'm not meeting hardly anybody who can get the advertised rate. The point is last year, you would get the advertised rate pretty easily. This year, they're adding insane amounts of risk to it. Now, you got to say, at 8%, is that where it ends? No, it isn't. Because if you see an advertised rate at 6%, and you say to them, oh, it's a commercial loan, now they want 8%. If you're just buying a residential mortgage, like you're getting an investment property, they go, well, now we want 8%. And then they say we have to add the risk on it, and you're going to get charged 10%. So from 6 to 10, unbelievable. That is going to drag down home prices really hardcore. And this is where we haven't seen these types of numbers in decades. And this is why I'm afraid of it. Anyway, guys, I'm doing this live here on a Sunday night because I'm here for you. I want to be able to answer your questions if you have any. Let me know what questions that you have and how I can help you in your real estate journey. There is a lot of dodgy things that are happening in the markets today, and we want to make sure that you guys are doing okay. So in the markets, we're going to continue to see this squash down, and it's all going to come to play when people are going to be in trouble. They're going to be running out their terms. So a lot of our American friends, they don't realize the situation that we're in. Now, in Canada, where I am, it's the same as Great Britain. So let's add Great Britain and Canada, for example. Normally in Great Britain and Canada, all we can do is 5-year locks on our mortgage. Of course, we all have a 25-year amortization. Sometimes we can have a 30-year. It really depends on your down payment. But the point is you have to renegotiate in Great Britain and Canada. You have to renegotiate every 5 years at the maximum, at the outside. Generally could be 1 year, 2 year, but that leaves Canada and Great Britain way more susceptible. The United States of America, you have a 30-year lock. That's their number one product. Talk about that type of security. Wish that we had that in Canada. Wish we had that in Great Britain. 30-year lock on rates. That means if you had a 2% mortgage, you lock that in for 30 years. Unbelievable. So this is the poison pill that is going to hit everybody. And it's going to hit a lot harder than you think. So in the United States, if we go back to 2007, 8, 9, do you remember it was that predatory lending, that subprime lending that sparked the worldwide crisis? It was only 4% of people that could not pay. And that caused the entire problems that we saw around the world. This is going to continue. But the United States, this time, they tightened up their standards. And the poison pill here is 40% of people have a mortgage under 4% locked for 30 years. So an enormous amount of people are going to be okay. Whereas Canada and the States, with 5-year maximum normally fixed rates to renegotiate every time, it's going to hit Great Britain and Canada first. But the United States are going to hit the commercial real estate first. So pay attention, please. I always tell you the next 2 years is going to dictate the next 20 years of your life, next 2 decades. And that's how important this is. I can't wait to buy properties for pennies on the dollar from people who want to sell for whatever reason. But prices are going to have to go down to reflect. Let me just break this out. I want to show you one more thing. Here is some of the crap that you're going to hear from a lot of realtors. And so if you learn anything, I just want you to say, well, maybe second guess everybody for every single reason. Okay. If you do that, then I'm going to be happy. So even I was just talking to a mortgage agent today. They're going, we will give 4 times your income. Whatever. What kind of stupid measure is that? Because that changes as people's incomes change. And guess what? Last year, you were only getting 3x your income, but that is only to AAA people. And the problem with AAA is that keeps changing every single week. The definition of AAA was changing. Last year, 2022, was a credit score of 700. And in 2023, they want 800 credit score. So how do you keep up with that? So this is a bad way to look at it. The only rule that actually doesn't change, it doesn't matter decade, I'm going to write down decade, any decade, doesn't really matter when. You can have 30% of your income for housing. This doesn't matter if it is real estate to purchase or rent. I don't care if you have rent or buy. This does not matter one iota. If you rent or buy, you can only have 30% of your income going to housing, or you're not going to be approved. And most landlords are not going to approve it, even if they're private landlords. I'm not talking about institutional landlords. This is the same thing. So you got to make sure that you guys are going to be on the right side of this, man. Honestly, there's going to be a lot of people hurt, and I'm already running into a lot of people who are already very, very hurt. So I want you guys to do better. Keep on succeeding. Keep on crushing it. I know that you can. So let's take a look at a couple of the questions that are coming in, you guys. The new bailout mortgages news is a huge move. Government and or Bank of Canada is preparing for the worst. Yep, of course. So they're referring to all of those new guidelines that are coming out. The new guidelines that are coming out is going to be to people who have residential mortgages only. So if you're an investor, you're screwed. It has nothing to do with you. If you're on an investment property, they want this only to be to people who have their homes. So is it a bailout? Of course it is, because all of this money, they're forcing the banks not to charge you any money. So they have to make up for it by charging people who currently have mortgages or currently do qualify for mortgage, charging them a higher rate to make more interest on them. We just looked at that a couple seconds ago. All that 10% that's coming out right now, we're going to see more and more of that. How long will it take for liquidity to kick in? For liquidity to kick in, it normally takes about a year. Okay, so I guess for Zach, his question is, how long will it take for lower liquidity to kick in? I'm sorry. So that's a good question. Lower liquidity. So the lack of liquidity. Just go and look up response lag online. This has been around for decades. The response lag is a period between the time there's monetary or fiscal policy change. So how long does it take for the policies actually to trickle through in an economy? And it says it right there. It can take 18 months before there's any evidence. So we're only a year and a bit into interest rates starting to go up, but that was the first interest rates. We haven't even started to talk about the interest rates that just happened in the past couple of weeks. Now that 18-month gets set all over again. It's going to take time. It always takes time. But that's always the question. And so we can do this. All right. Next question. Where does the principal residence in a duplex or duplexes fit with the new guidance? We're waiting for guidance on that one. So if you have a duplex that you purchased and in that duplex, you live at the bottom and you have a one rental upstairs or something like that, will you be qualified for it? So the Office of Superintendent of Financial Institutions, those guys are going to be coming out with new direction in probably the next 2-3 weeks or something for the banks to implement. So even though that the consumer wing of it is giving these guidelines are laws that we have to follow. And so we're not trying to, we don't know how they're going to do it yet, but OSFI is going to come in and give them the rules that they actually have to follow by it. That's going to be coming. All right, you guys. So keep your eyes peeled in the next couple of weeks. If you guys see any articles of that, please send it my way. I would love to hear your take on it. So you guys, right now, there's two things. If you are thinking of buying properties and the numbers don't make sense where you are, sit tight. Sit tight. And if you are looking to, and you really have an itch and you want to be buying property somewhere, you want to be expanding yourself. I'm always looking at real estate. I was looking at real estate today for myself. Look outside of your comfort zone. Start looking out of state, out of province, out of your city, in units that you wouldn't expect. If you just wanted to buy a condo, maybe now you want to buy a dry cleaner. I don't know. Do something, because inactivity is worse. So the danger that we run into is we're afraid to make a step because we're going to lose money. But what you don't realize is sitting still in a massively inflationary environment is already a loss. So you might as well try something because you're losing by sitting still. It's like saying a little rabbit running around the forest, and his idea is, well, I'm just going to sit still and never move, and maybe no one will find me. Well, the fox is going to come and get you. So inactivity is really, really bad on you. It's going to hurt. And so make sure that you're still moving ahead. Look outside into other areas, smaller businesses, other homes, out of province, out of state. There's a lot of still great places to buy. If I'm thinking down in the United States, I love the Florida Panhandle or North Florida. If you're looking in Tennessee, freaking awesome. Love Tennessee. If you're looking down in Texas, a lot of great places in Texas right now. I was looking at Nevada. In Canada, you got to look at the Maritimes or the prairies. Amazing. Just move yourself out of your comfort zone and you're going to be very, very happy. All right. So if we just jump back in here, then I'm going to go back here. Does anybody have any questions specifically about the Toronto market? If you guys want to ask me about a certain area. Now, what we can always tell, so this is all properties I have here, all condos, all homes, whatever. But if we actually break this down, watch this. I'm going to go to type and look at detached properties. So this is, it doesn't matter what the city is. Honestly, it doesn't really matter. In Canada or the States, this is what you're going to see in general. So property prices drop from 1.6 million, 1,634 down to 1,384. So what is that? That's a drop of 250,000. So the homes on average dropped $250,000, but they had dropped a lot more than that before. Okay, so this is detached properties, right? So that's a $250,000 loss. Let's take a look at what happened on condos just in Toronto. And bread and butter condos, let's just say it was like maybe a one-bedroom condo. Let's go to one bedroom, because everything really matters about the property type. So property types on those properties dropped from 704,000 down to 628,000. So that's a much smaller drop. Now, I know the price is different. I know that. But that's a very small drop percentage-wise. And the big difference that is going to hit you here, it's not just the percentage, but in properties under 500,000, right, you only have to put 5% down. If you cross that million mark, you have to put 4 times that and put 20% down. So the difference is going to be hit you more because of the mortgage rules. Whitby detach is a question that's coming in. So let's take a look at Whitby. If you guys on Facebook or YouTube have any questions, please shoot it out there. I'll see what I can do. So let's take a look at Whitby, and we're going to look at detached properties. 1,056 properties sold in the past 2 years. Pretty cool. Average price was 1,547,000 on average at peak, and now it's sitting at 1,221,000. So when you look at charts, and if you guys are going onto the YouTube channel, you can actually see it, but you can see that there's a weird wonky thing that happened in December. That could be just a couple outliers, very expensive properties that sold. That looks way out of character. So to see though that prices have bounced from 1,040,000 up to 1.2, almost 124, to get that extra $200,000 is a gift from heaven. So we're talking about you going through this exhausting range here where we're having interest rates go to the moon, rocketing up, and still home prices are that resilient and have bounced back. Unbelievable. So this is all of the lemmings who are trying to fight the Fed. They say, remember that expression, don't fight the Fed, don't fight the central bank. They will win. Their guns are bigger. And so to me, when you see that bump in price, my goodness, I think that's absolutely incredible for sellers in this market. So in Whitby, you see, we have to get down to the nitty gritty. It really depends on how many bedrooms it is. But if you see right here, it was selling in Whitby, detached properties, 20 days on market at the beginning of the year. Now it's sitting at 9.6. But as you are seeing the liquidity dry up, as you are seeing these new regulations coming against investors, you're going to see these days start ticking up. It's going to take longer and longer to sell a property. Also, if you're going to look at how much people are willing to pay currently, look at the insanity that is happening. People are willing to pay 110, almost 111% of what is asking price. So that means if you had a property and you listed it for $1 million, you would get $1,100,000, which is crazy. 100,000 over asking, and that is the average, which means there's people paying $250,000 over all the time. And so when you're going to see this liquidity dry up, what happens is kind of what you happened last fall and last early winter, where we're going to have 98%. It's going to drop what people are willing to pay. Instead of paying over, they're going to expect deals and expect you to cut down the price. So you know what? These trends just happen over and over and over again, and it's up to us to pay attention to this. So my suggestions for you guys is keep on pushing and keep on learning. This book right here, The Changing World Order by Ray Dalio. He's put out a lot of stories recently. This book talks a lot about how the world has changed, how it will be changing, and this giant issue that we're coming up with, massive debt bubbles that's going to be happening everywhere as a result of this monstrous move in interest rate policy. Must read, one of the best books of last year. Please go take a look at it. Was it 2022 or 2021? I don't remember. We had to get it as soon as it came out, but it just came out recently. I really, really think you guys should read it. Changing World Order by Ray Dalio. He came from nothing, was broke, and now he's a multi-billionaire, right? So he knows what he's talking about. He's been doing it since the 70s. All right, you guys. Well, I wish you guys the very, very best. I'm here. If you guys need any messages, you can always reach out to me. Sellhigher.ca is my website. You can go there if you're thinking of selling your home anywhere in the greater Toronto area. We sell property for more money, less hassle, and faster than the competition, using a lot of expertise, a lot of staff. We have a lot of technology that we run, and that's how we do that. So I wish you guys the very best. If you need me, reach out anytime. I'll try and answer your questions. I wish you the best. Have a great night.